It's late. Hello. Right, we're live. Welcome everybody to another live hangout. I'm happy to say have Aaron with me again. Hi Aaron, how are you?
Yeah, good. Thank you, Nick. Good. Thank you, Nick. You all good?
Yes, very good. For those of you that didn't see the live stream we did. Hi Aaron, how are you?
Yeah, good. Thank you, Nick. Good. Thank you, Nick. You all good?
That was me. There's always something. I was saying, for those that didn't see the hangout we had, which I guess was a month or two back now.
Maybe longer,
Yeah. Aaron is an accountant and came on and we did a chat about claiming expenses when we buy things for cash, which was a really popular video. So I'm glad we did that. I think I've linked that below already. If not, I will do, so you can check that out. But do you want to just explain a bit about who you are and what your experience is for people?
Yeah, so first and foremost, I'm a chartered accountant. So I think there was some confusion maybe last time as was I accountant, was I not? But now I am a chartered accountant. I work for myself primarily as the accountant, and I have another little firm called Bofix, which kind of deals with all the QuickBooks licenses and all that lot, which is much more of a there's more people working there, so I can pass all that sort of stuff on. And also I'm a reseller as well. So me and my better half, we've been reselling now for, well, just before the turn of the year when we properly got into it, and mainly kind of go for the auction houses and try and get some higher end stuff and then try and flip them over, varying degrees of success. But yeah, it's always been interesting. So
fantastic. So accountancy background, reselling, so you know the problems we all face. It's ideal. So we're going to chat today more about claiming expenses. If you're self-employed, working from home, what can we claim off our tax bill effectively? We're going to get into that in a minute. I'll say a few hellos because we are live. If you're watching us live, please pop in. If you've got burning questions about claiming expenses from home, this is the time to air them. So we will try and keep an eye on the chat. Let's say a few hellos before we get going. That's Damien, good to see you. Mike, hope you're well, Mike. Lots of people. We've got Rach, Andrew from Harrisburg, Pennsylvania. Welcome. The vinyl price, right up my street. Amy, there's Andrew, welcome. I've made you a moderator, Andrew. Don't abuse the power. Silverhair Stacker from Texas, welcome. So Richard, Gary, Allison. So welcome everybody. If you're watching us live, if you're watching after the fact, you can drop questions down below and I'll try and get back to you on those or pass them on to Aaron if I can't answer them. So yeah, where do we begin? That's a good question. What do you say is the most prevalent question people ask about expenses when working from home?
So the one that comes up all the time is basically what expenses can I claim? And most of that becomes down to the fact you're about to do your tax return. You've got, a few days left until it's done and you haven't recorded anything at that point. So it's a case of, well, what can you claim? Now, just to make 100% clear, because there are two different types of resellers. So there's a reseller who works from home like yourself, and that's the bit we're covering today. But also there's resellers who may have external, places that they keep all their stock. So your George Rosses of the world and all them, like, they've already got some sort of expenditure. And when they're kind of like that, it's common sense, but it is just very important that you make sure you put all your expenses relating to there. When it comes to you being living from yourself, though, and living at home, it gets really complicated in terms of what can be claimed or what can't be claimed. And there is some kind of, it's not quite as black and white as it used to be. There's some kind of things that have cropped up that people need to be aware of and everything else. So that's really what this is about. It's about, making sure you claim what's rightfully yours, but not too much that you cause yourself some issues later down the line.
Absolutely. So, I mean, I've made a few notes. I think I don't claim it as much as I can. I think I'm overcautious with it.
Yeah.
But let's start with the big ones. I mean, I work from home. I have an office here, which is in part of my house. My wife, as you may be aware, has a separate office, which is how we like it, at the back of the house. So can we claim, if we were renting, we were actually mortgage free, but if we were renting or still paying a mortgage, can you claim any percentage of that?
Yeah, so it comes down to basically HMRC has got this real bee in the bud at the moment, and it's all about this phrase wholly and exclusively for the purpose of trade. So basically any expense that you are going to put for a business, you need to qualify through that. So them looking to make sure that it qualifies under there. Now, when it comes to expenditure regarding your home, obviously there's going to be a point to that where it's not wholly and exclusively for the purpose of the trade. There's going to be elements of it that's personal. Now, HMRC tried to do you all, or us all, should I say, because even I claim for it, justice by putting in what's called simplified expenses if you're self-employed. So the idea is to try and stop having to have all these complicated issues, which we'll go into. They came up with this fantastic scheme. I say fantastic, let's put the air quotes in there, where they will give you a flat rate per month to claim for working from home. And the idea there is it all depends on how many hours per month you work. But just to give you a taste of it, if you work less than 50 hours, you get £10 per month. If you work up to 100 hours, you get £18 per month. And over 101, it's £26 per month. So, it's not a lot of money at all.
That sounds pathetic.
It completely is. And in fairness to HMRC, it's designed more for, say when you had your business and you were still having to work from home from time to time to do bookkeeping or run stock orders and stuff like that. It's designed to kind of complement that sort of expenditure and just be more of a, you're working from home because you work on your business, you can never stop sort of idea. So it's trying to kind of encourage that. So it's not necessarily designed for kind of you or in your case where you actually are working from home. So when you are working from home and when you've actually got a building or a separate area or an office space where you dedicate as a workplace, HMRC are a little bit more forgiving. So there is a way in which you can do it. Now, the expenses that they will put in there are going to be heating, electricity, council tax. They're allowed to be put into the calculation. And then if you are renting, you get to put rent. And if you are mortgage, like you said before, then the interest of the mortgage is allowed to put into calculation as well. But it is a calculation. And the calculation is basically going to say, you're allowed to look at those expenditures. You're allowed to look at all that cost and basically the cost of keeping that house together. And then you have to look in a reasonable proportion of what that cost is based on the business. So what they're looking for is how many buildings have you got in the, how many rooms have you got in the house? How many of those rooms are you using for business purposes? And then you're supposed to put a percentage on that. And how many days of a week are you working and things like that. So they're the bits where you've got to be really, really kind of careful in terms of the calculation. But it is allowable, and it is something that if you do put in there and you do show that you've done the due diligence and you've done everything that you've done to kind of prove that that is an allowable expense, it is something that is then able to go on your tax return.
So is it as simple, let's say our two offices make up a fifth of our floor space in our house. It's done on percentages that way, like how much space is actually given over completely to the business. Roughly, does that make sense that way or not?
Yeah, definitely. I mean, that is a proportion you could use. And the thing is, HMRC can't really argue one way or another compared to what you're the one who works for the business. So you're the one putting together the calculations. They can kind of try and fight you for it and maybe try and change the percentages around and stuff like that. But it's really your perspective of how much you use. I wouldn't just do based on floor space, though. I'd also try and reduce it a little bit more by, say, days of the week or something. So although tend to work 6-7 days a week, you probably best, just as an extra element of it, trying to reduce it down to, say, you don't work on a Sunday, so it's only 6 out of the 7, and try and reduce it down again. That's where we would normally advise people about putting those expenses. So for your big ones, so heating, electric, council light, mortgage, or mortgage interest or rent, that's how you should really look at apportioning the costs.
Okay, so as Richard pointed out there, the obvious ones are electricity, heating, so that involves gas, etc. Broadband and those expenses. The complicated part is obviously we live in our home as well, so we're using a lot of that cost for electricity to live, not to work. So that's where you have to break it down. And also with the broadband, obviously we use that for our personal use, and we have Virgin and a lot of that expense is for our TV package and X, Y, and Z. So how do you unpack all of that? It's so complex.
So if you've got a separate telephone line then you can definitely kind of proportion more of that to a business than, say, any of the other portions we're talking about. So heat and light, unfortunately, and most of that's going to be down to your personal use, so most of it's not claimable, but at least you can put a percentage in there that's going to be worthwhile. When it comes to telephone and to an extent internet as well, it's kind of one of those, if you don't have it, you can't use it at all. But if you do have it, then then you're going to have to use it for your business. So those two you can separate out, and you take the bill and then you go, right, what is a fair percentage of business versus personal? But it doesn't just have to be that, well, I made 0 calls this month for my business, because at the end of the day, no one uses their business, their home telephone for calls these days. But either way, you don't have to go down that, because there's no what's called P11D on your telephone or on your internet or anything like that. So there's less of an element there for personal versus business use, but you still should apportion it to a point. So, we normally would put about 80% or something like that, because again, without it, you can't do any work whatsoever. So you're going to have those two pieces of.
Right. That's interesting. I think we have been overcautious. I think we've been claiming about half of our internet bill. But I think, thinking about it, all week we're on it all day long for the business. So yeah, I don't know, but I think we've been claiming only about 50% of our internet, because we obviously still use it for everything else and for personal, and our daughter's using it a lot. But yeah, okay, that's really interesting.
And I think, the simplest way, if doable, is just have that second line, but it becomes so expensive that you might as well be cautious and claim for the telephone costs and the internet costs, and be pragmatic about it and make sure that you don't claim 100%, but at the same time, your business needs it, and there's going to be a need for that particular one. So
exactly.
we can justify that.
Like you said, running an internet business for sure from home requires having it. So yes, I totally get what you're saying. I just thought when you were talking about phones there, both Andrea and I have phone contracts, which are fairly expensive. Yeah. And we use our phones probably more for business than anything. Yeah. So is it as simple as, again, proportioning a percentage of that phone contract to the business? And
you're really lucky with mobile phones, you're quite lucky, because again, if we're talking about, say this was a corporate and you had a phone for personal use that you were given from a business, there's no what's called P11D, so there's no business to personal ratio. HMRC's basically given up and said there's no real way of being able to split what those differences are. So when it comes to that one, tend to kind of mobile ones, we just put 100% in. It's a lot easier to put that through. And then the cost of the unit as well. So if you're buying it off contract or you buy it directly from Apple or Samsung or whatever, then they're allowable as well. So we tend to just put those in, because that's one of the ones where it's really difficult to decide how much is personal and how much isn't personal. So what is business, what is personal? So it's one of those where there's not really a penalization for it either. If you want to be overly cautious, then put 90% of it or something. One of the things that I've definitely come across with HMRC, whenever you do private percentages or anything like that, is if you're putting a claim in for a cost and you've applied a percentage, say you've put 90% or you've put 80%, normally what HMRC will do then is, if they had an inquiry with you, or they were going to argue with you, or they were going to look into an investigation of any sort, then they don't say, or the first thing they would say is it allowable or is it not allowable? Now, if you've put the transaction in with no private portion whatsoever, they could go either way on that one. If you've put the percentage in, or if you've put the cost in and then applied a percentage, they can't take away or they don't tend to take away the whole 100%. They'll start maybe arguing with the percentage. So you're always in a better position there, as opposed to they just turn around and say you're not allowed that expense at all, and then then you've got more of a kind of fight back then, and trying to argue what the reason the cost is.
Okay. But that's interesting about claiming for mobiles. To be honest, I'm not even sure we have been for a while.
Yeah, I would definitely put them in. Yeah. But
it's one of those things, and we're so, it's the last thing I think about doing my tax, and there's so many things I should be claiming. There's lots of comments and questions coming in. Let me highlight one.
There is just one thing to note, though. There is a caution to when you claim your use of home, though. So if you claim use of home via the simplified expenses, they can't argue with you. It's been put out there. Maybe they could argue that you're not doing those hours, but that's as far as they can go. Soon as you start going away from that, though, you've got to think about the consequences of that. And mostly the consequences is down to the fact that it's very, very, very unlikely, but you've got to think about your buildings insurance, because you're starting to think about that there's a business element to it, and you're starting to declare a business element. So you just got to look at your fine line and make sure there's no business insurance issues. Building insurance issues. Right. And then again, really, really doesn't happen very often, but just make sure you're not liable or don't need public liability insurance, if you're inviting people in and stuff like that. So because you're declaring it as a business expense and you're putting it as business an element to it, then you could fall foul of those sort of things. It's unlikely, but it's just something just to make sure you're protected. Yeah, and then the bigger issue, if you like, is when you come to sell the building. So if you come to sell a property and you don't have any business element to it whatsoever, you get what's called private property relief. So you can buy and sell. If you've only got one asset, there's one building that is, and one home, then you can buy and sell and there's no tax consequences whatsoever. If, though, you're starting to say that actually 5% of my property is business, then that private property relief doesn't apply to that 5%. So when you come to sell, they may be entitled to have a calculation that some of it is deemed as capital gain. At that point, there's all these other capital gain reliefs and all that lot available to you. So you'll probably end up paying very, very minimal amount of tax, but it is something to be considered.
That's an interesting one. Yeah. Okay. That is interesting. Complicated, but interesting. Yeah, Aaron's saying there, interesting. Didn't even think about internet. In theory, working from home at the moment with my other job is using it all day. Yeah. Can you count watching resellers on YouTube as working hours for research purposes? Don't know if that's a serious question.
I mean, if you really want to get you £26, but I'm sure most of us are doing the 100 hours plus easily, aren't we? So it soon mounts up.
Okay, let me scroll down to the end, see what we've got here. I've got business, Virgin, Broadband. Can I claim all of that?
Yeah, if you've gone for a business line, no problem whatsoever. And the weird thing about Virgin is, or we definitely found that, is that when you jump on their business plans, although you don't get the fancy telly or anything that comes with it, but they guarantee you faster speeds and more reliability and all that lot. So sometimes it's worthwhile looking to see what other options are. I know BT have their business line now comes with this 4G Assure, they call it. So effectively, it's got a SIM card in the back of the router. So if your telephone line went down for whatever reason, then it will flip over to a 4G, and then you never lose internet. So these days, sometimes having a business line can be really beneficial.
Sarah has a question which will apply to a lot of people doing this from home. My internet includes my TV, and Virgin don't make it clear on the bill how much is my internet, like how much the proportion is, and we have that issue. So where do you go with that?
So what I tend to do with our clients is I'll tell them or ask them to go online and see how much it would cost just to buy the internet outright. Now that's normally in your favor, because normally buying the internet outright as opposed to a bundle, it costs more. But at the end of the day, it's that whole argument that your business needs internet. So you just take whatever the cost of the internet or what Virgin would charge you for that internet, and then you'll do some form of private percentage on whatever seems right and seems reasonable. But again, I tend to try and push it more towards a business as I can, because again, without the business element or without the internet, there's no business. So it's kind of that sort of argument with them, and HMRC have been fine with it so far. So
okay, that's interesting. I hope that helped, Sarah. So if you find out what it would cost you just to get the internet from Virgin, then you could potentially claim that value. Okay. So were there any other topics or things that from your experience come up? I was trying to think what else there is.
Well, I was thinking more of kind of what other expenses that people miss out on. So, I mean, the big ones or the ones normally people I've seen miss are things like fixture and fittings. So when you go out and you buy yourself some new shelving and you buy yourself a new chair and you buy yourself a new table, you normally forget to put that through as an expense at the time. And when you come to do your accounts later or your tax return later down the line, you normally forget about it. So it's things like that. Just keep a memo of it, keep reminding or remember to include it because they're so easily forgotten. And they're such big transactions, chairs and tables and everything could be quite expensive. And also iPads and computers and cameras and lighting equipment that we're needing to keep the eBay store going. Don't miss out on those sort of costs because they're the ones again where it's one where you are 100% allowed. It is something that is allowable for your business, so don't go missing it when it comes to it. So if you are using something like QuickBooks or something, it is relatively easy to take a photo of it and move on. But if you're doing manual or you're doing it on Excel or whatever you're doing to keep your books, you just want to have a memo about it so you don't forget.
Yeah, definitely. I was just thinking as well, extending it to YouTubers. A lot of my friends are now YouTubers, and we are taking some money from this, and it's certainly part of our business plan now is to keep putting out content and growing the channel. Yeah. So I guess there's elements of that I need to be aware of that I can claim from as well. I mean, that comes down to the phone, which I'll be claiming for anyway. But then there's the camera equipment, etc., the microphones, everything associated with that I need to produce quality content is now tax deductible.
Yeah, exactly. And I think YouTube really does open up some other avenues as well, because you might want to review an item, you might want to look at an item, you might want to brings a particular item in, and if you're doing it for the sake of the channel and you can prove that, then that could potentially be an allowable expense as well. So YouTube is a really good way of being able to kind of justify certain expenses that before you would never have had a chance of justifying. But you call it, but HMRC have another thing where what they want to see is if you generate income in a business, they want you to see expenses that relate to that income. So if you've got YouTube money coming in because of this particular, review you've done or whatever it's going to be, then you can start trying to think about, well, does that mean, or that should entitle you, should I say, to be able to claim that back as well.
Yeah, it's kind of getting a mindset, isn't it, of remembering to think about.
Yeah. And if you've got logos and stuff, you've had people doing your logos on Fiverr or whatever it's going to be, that's all allowable. So it's just, again, it's remembering it, because at the time, I think we're quite good at remembering stock because we see stock coming in, we see stock coming out. That's easy to remember, but it's all these other little expenses that you're incurring to grow your brand, grow your YouTube channel, grow your business, whatever it's going to be. But they're still allowable and they get forgotten about. So it's just remembering to put them in and claim from at the time.
I'm terrible at that because I think, it's only a tenner here, it's only 20 quid, whatever. But over a year, I've probably not claimed a grand's worth of expenses, and I need better systems in place to remember to do this stuff, because it does add up over the tax year.
It massively does. Yeah, and it's all about making it easy for yourself. So I said last time, something like QuickBooks is just take a photo of it, move on, take a photo of it, move on. And then when it comes to the date when you go and look at doing your tax return, then the information's there and it makes it nice and easy. So, I'm not saying QuickBooks is the only way of doing it, but having a system like that just makes your life so much easier.
Yeah. I have just noticed, is that a flat Eric hovering above your head?
That's the one I won, didn't I?
Oh, is that one? Fantastic.
Yeah, this is the one. I'm sure it was that one where me and my better half were bidding against each other for it.
That sounds
sure that's how it ended up.
Excellent. Okay, let's see if we've got any more questions. Now, this is more outside of the home, but we can touch on mileage a bit. Sarah says, question, how about mileage to and from the booty? Is the 10K 45p per mile per part? Not sure I understand that last bit there.
I think it's if there's two of you working at the business. So for you, it would be like if you and Andrea work at the same time. I think that's what it means. But yeah, 100% allowable. And the 10,000 miles for the first 45p that is based on, it's actually per car, so it's making sure that that particular car doesn't go over it. So the most important thing to do there is just have proof that you've got that mileage. So it's making sure that you've got some way of proving that you did it. Again, an app like QuickBooks records the mileage for you. Remember, going to charity shops as well, that's going to be claimable. So making sure that you've got that. Going to and from the post office and UPS, Hermes, whatever you've been utilising, they're all going to be allowable. And the way of making it nice and easy for yourself is trying to make it so it automatically records. So there's lots of software out there now where you just install an app on your phone, you go drive off, and then it records that transaction for you. And you can set it rules so that you could say that every time I go from here to the post office, every time I do here, just record that as mileage for me. And then when it comes to the year, you can add it up and see if it's under the 10,000. And if so, all of it's at 45p. If not, you just reduce it down to 25p for the stuff over 10,000 miles. So yeah, it's a massive amount that can be claimed, and it's supposed to cover, the reason it's so high, it's supposed to cover for your insurance, for the breakdowns and the whole aspect of running a car. So, you know, it's a good one to be claiming for.
Okay, that's an interesting one. You said that 45p is so high because it covers maintenance and stuff. Because I've never been sure. You know, you take your car through the MOT, particularly my old Ford, and it always needs a couple of £100 worth of work. So if I'm doing it the 45p way, I can't claim part as a percentage of that bill then.
Yeah, so the whole point of claiming full 45p is you've opted not to put the car into your business. So most of the time that's a good thing, because sole traders limited, sole trader partnerships, you probably won't have too much of an issue. But if, say, you went to a limited company, you try to put a car in, you get absolutely hammered for tax. And putting a car into any business these days have been more and more restricted in terms of what benefits are given to you, unless it's an electric car, because HMRC and the government have got this new incentive to try and incentivize everyone to go and buy electric. So unless you've got an electric car, it doesn't normally make sense to put it into the business. So the idea is that the 45p per mile is to try and cover the whole cost of your business, of your car. And that's why it is as high as it is, because it's about the repairs and renewals, repairs and maintenance, the MOT, the insurance, the cost of the car itself, and then the fuel on top. The other option is you can claim, and I think it's like 12, but it depends on how much your mileage, how much cc's your car is, an engine, but there is a reduced rate you can claim, which is just for fuel. So it's like 12p per mile, whatever the figures are. And at that point, then you could consider the running cost of the car on top. But yeah, most of the time, or if you are claiming 45p, that's for the whole of the car. And then the idea is then that you're supposed to then, you know, have reap the benefits of taking that out of the business and be able to repair it and keep it maintained.
Okay, right. That's interesting. Thanks for explaining that. That makes sense. Scroll down again. Excellent topic, says DIY Detail. Yeah, it's a topic that comes up so often, and I never feel that I know the answers, because I don't. So I'm really glad we've got Aaron here who can answer some of this. Okay. Let's see. Hurricane Ian, can you claim entrance and parking fees to a car boot sale even though it's cash payment?
It's that same old argument, isn't it, or issue that we had on the last one, where it's, yes, you definitely can. It's definitely an expense, and it's definitely something that you are entitled to, but it's proving it and making sure that you prove it. So we go down the same kind of route we did last time. What I would tend to recommend is taking photos of the car boot itself, of the transactions you bought from the car boot, should I say, and just include it on there as part of the fee as well. I mean, it is, you know, you would have been charged something to go in for the majority of the boot sales, so it's just putting as much proof as you can.
I've tended to, and I don't know if this really covers it, but I write down a A4 page generally and list in some detail what I pick up and the total cash expense, the date of the boot sale, where it was, and I will put the fee at the top or the bottom. So entrance fee for me and Andrea, let's say it was £3 each, and I will just add that to my list of stock almost, or the expense for that trip to that boot sale. I don't know if that is sensible.
Yeah, no, that's perfect. I mean, it's you kind of just trying to prove to HMRC as much as you possibly can. There is no paper trail, there is no audit trail, as you like. You're just trying to claim it, and you doing, you know, something as simple as putting the price on when it relates to stock that you can physically show and physically kind of have proof of, then that's the best way of doing it. And again, I just find a quick photo of that, with the stock, just takes all that doubt away. It's just a case of, here's the stock I purchased, here's the piece of paper that tells me that this is what I bought and this is how much I spent and everything else, and it just adds that bit of thing, bit of proof to it. And again, if you've got something like QuickBooks or Xero or any of the other ones, you get to take that photo and just stick it on the transaction, so it's there.
Some actually give us a little label to say you've paid, so you could literally take your shoulder with the on. Excellent. Okay. Right, so we covered this more in depth in our last video. I think I've linked it below. If not, if you search Nick Hill's Aaron, it will probably come up, where we cover in more detail about cash purchases. This one's more about claiming expenses from working at home, but please go and check out that other video. Now, I don't know how serious this is, but don't forget to claim for your glasses. If you can't see, you can't work. I mean, it's a good point. I never have, but I renew my glasses fairly regularly because my eyesight is deteriorating. What percentage of that could I claim potentially or not?
Well, HMRC have these rules about VDU and they have this everything else. So they're encouraging you to go and get a eye test and go and get some glasses. Now, the eye test, definitely, we can put that through, no problem whatsoever. When it comes to the glasses, though, it's kind of that they give you a percent or not percent. They give you an allowance, and you can basically claim up to the allowance. If you go above the allowance because you've gone for designer or whatever the reason is, then that's where you can't claim. So HMRC make it really straightforward on what can be claimed and what not. Basically, you're following the same rules and regulations as you would if you had an employee, and the same rules apply. So, if you had an employee, you would be expected to comply by VDU rules and everything else. So you would have to, or given the opportunity, should I say, of going for an eye test, and you should be able to pay for that for them. And then you should also have the opportunity to claim for glasses up to a reasonable price. So, not your expensive glasses, but something that's worthwhile doing.
Yeah, I don't think I've ever put through glasses.
Yeah, it's it's a difficult one, isn't it? Because it's about forgetting about it. You come to do it, like you said, you're doing it at the very end of a tax year, and it's sometimes one of those where you go, what did I spend in that year? And that's always the difficulty. That's where you forget to do things, unfortunately.
Initially, it's awareness, being aware that you can make a certain claim, and then it's remembering to do the damn thing and actually make a note of it and put it with all your expenses. Yes. Ashley, okay, semi-serious question. Okay, we'll go for it. About claiming expensive for guard dogs. Excuse me. Can you claim for dogs guarding stock, like scrapyard dog, but a toothless tat hound instead? Okay, interesting question.
It's a very difficult one, unfortunately. I've had this argument with, I've had to fight for landlords before who have dogs for guarding purposes and everything of pubs, and HMRC do not like the idea of dogs being an allowable business expense. So it's one of those where they tend to fight you for it at every little part. So, I personally, I wouldn't go down that route, and I wouldn't push that one through.
Okay, Sharky, this comes up a lot. We'll quickly touch on this. I know what I normally say, but I'll let Aaron say. So I'm new to this. I work full-time at the moment. I've started selling my personal belongings at the minute, but looking to start buying and selling. When do I have to register with HMRC? So I know what I normally say. What would you say?
Well, it's this intent again, isn't it? So, if you have an intention, like you're saying here about buying and selling, then at that point, you've got to start considering about telling HMRC. So that first bit where you were selling your personal belongings, absolutely fine. Everyone's allowed to do that. There's no issue whatsoever. But when you intend to buy something that you're going to look to sell, at that point, you really should consider it. Now, I know, and I remember last time that I got a bit of slack for this, but I know there is the £1,000 trading allowance, and I know that's kind of something that you can utilize. And if you sell over £1,000, then, but personally, I find that too complicated, and that's because it's a difficult yardstick to put, because you're saying, right, I'm allowed to have £1,000. It's in sales, and it gets a little bit complicated. So personally, what I would say to everyone is, as soon as you've got that intention to buy, intention to sell, then at that point, just tell HMRC, because depending on your personal circumstances, there may not be any tax related to it anyway. The allowances are pretty high at the moment, so you're allowed to earn quite a bit in terms of overall income. But I do think that it is worthwhile just, registering at that point, telling HMRC you've got an intention, telling HMRC that, you're looking to have this new self-employed business. And then your only requirement then is each and every year you'll have a tax return to complete. And then when you complete that tax return, you're just going to say how much income you brought in, how much expenditure, which is what we're talking about today. And then whatever that final figure is, there may or may not be a tax bill to go with it.
Yeah. I hope that helped. I mean, if you look at it like, as soon as you start thinking like a business, as in, oh, that's cheap, I can make some money on that, that's the point you need to start thinking about it. But yeah, just to re-emphasize the thing, selling your personal belongings, you can do that and you don't have to declare those. I mean, that's totally fine, right?
Yeah.
Because people do get really confused at that bit.
Yeah, and I suppose the only difficulty people have is just bringing them out of the total sales, because it comes in your eBay sales list and it is there. There's no easy way to just mark it as a personal item, but it's just having awareness that it doesn't need to go through sales, and it's something to take out.
Can you claim if you're renting a storage unit to store stock? I would assume so. That's a business expense.
Yeah, definitely. And all expenses that go with it as well. So sometimes with these storage stocks, you'll have to pay extra for heat and light, or light, should I say, electricity. So yeah, make sure that you include all of it that you that you put in there. It's one of those where you've just got to just remember to put it in and remember to include it. But every element of it, if you've got to pay extra for parking, if you've got to pay extra to rent the trolley or whatever it's got to be, every cost that's associated with that store or that stock area, you really want to be putting through and making sure you're claiming for it. And yeah, it's all allowable, so put it all through.
Absolutely. And yeah, I mean, your eBay fees are a total cost of business. I mean, that's absolutely something you should be claiming back. Yeah, all of your expenses for selling, the cost of sales, those absolutely are claimable. So yeah,
it's a really important point, that one, because that's the point where I think a lot of people who first start in reselling and first start trying to put together their books and they start looking at what their requirements are, when it comes to eBay and PayPal and everything else, when it comes to you recording your sales, it has to be that top figure, the figure that you sold it for. You're going to get charged at source, and even now, especially with the managed payments and how that's working out, you're only going to receive in your bank account the difference of the two. So you've got to make sure that when you're declaring the income, that it's the top figure. So if you've had fees on it and everything else, you need to show that as a separate expense. So if you sold something for 100 quid and you had £5 worth of fees, you need to show £100 as the income, not £95, because it can have some really nasty effects later down the line if you
I think you're right. It's getting in your head that you separate out the costs, so that, yeah, and that's a great example. So you sell it for 100, the taxman needs to know that that's your kind of gross figure, and then you break down, but I had to pay a tenner in fees, I had to pay the PayPal fees, I had to pay the cost of it, so that's on the other side, if you like. You take one off the other. It's a mental thing just to get that process in your head. That side of it I'm quite good at, but it's just remembering to do the bits to claim.
Yeah.
It's the side
I don't think it's never easy made for us, is it? Because some of the reports that eBay produce can be a little bit confusing sometimes, and the PayPal ones are even worse at times. So, it's just being aware that you've got, your intention is that you've got to show that £100 as gross. We call it gross sales. So that is the amount you agreed to sell it at, and then that's got to be the amount that you put it on there.
Yeah. Well, I hope that helped, Sharky. It looks like it did, which is good. Oh, my chat has just jumped. I don't know where I was. Okay, I'll carry on here. Okay. Oh, Lee's in. Hi, Lee. Good to see you, mate. Okay. Shall we talk quickly? People may not be aware, but you have your own channel. Let's touch on that, and we'll see if any more questions come in. I've linked it below, but what can people find over there?
Yeah, so I've had a little rebrand now. So I used to be called Apple Core Productions. That was the one that used to come up there. Now I'm called Aaron Patrick, the QuickBooks chap. So I thought, a bit more relevant, a bit more everything there.
I thought, have I come to the right channel here when I was linking it before? Quick,
yeah. Quick rebrand. But yeah, so every week.
I was going to say, is that what people have been referring to you as? You thought, oh, I'll nick that.
Exactly right. It's because of all these QuickBooks Asset Experts I've been doing, which, if anyone, it's 8:30 in the morning. But yeah, so my channel is all about providing QuickBooks advice and advice to resellers and everything else. So some of the kind of more popular videos I've done lately is ones where I've done which, as a reseller, which type of business should you have? Should you have a sole trader, a limited company, or a partnership? What's the tax differences? So I've broken that down and I've shown that, and also, that and how that does affect. So I've tried to go into those little really deep dive ones, and they're the popular ones where people can hopefully, fingers crossed, they can kind of come away with understanding a little bit more about some of the more complicated areas.
Absolutely. I think it could be a really powerful resource, and I'm happy to send people over there to hear it from somebody who is qualified to talk about it, because I get endless questions and I just literally say, I'm not qualified to give you advice. So I can send people to your channel now, which is great. But Bad Wolf is in and says, Aaron is very diplomatic in his language. eBay reports are awful. It's one of the things that worries me about managed payments. PayPal reports are great. Yeah, if they don't break it down enough so it's easy to work out what you've paid and what your gross income was, it can be it just gives us too many extra steps to work it all out.
Yeah, I'm desperate to be finally accepted for managed payments because I want to do a video about how to record it, because I've already seen people having to record it and everything else, but I've not got the the actual base records to show it so that we can kind of do a video justice. But it is a little bit more complicated than it should be. And I am a little bit worried about what the future holds. But in theory, software should be able to sort that for us. So there is kind of already murmurings about certain software being able to connect directly to eBay and be able to get that information in and then be able to record it for you. So fingers crossed, exactly, because that's how it has to be now. I think integration's key, and integration's the way forward. So the more that software can help us in this, the more we're going to feel better, especially when it's like that involved.
Being a little bit cynical, surely eBay knows the basic information we need to draw out, and they could have made it so simple.
What do we say here without upsetting them for the rest? No, it's one of those where they've known about it for a long time. They've known how difficult or how important it is, but I think it's just one of those where it's just kind of rushed out. Like, I mean, the date that it all went live was a telling time, wasn't it? Was it 2 years, 3 years, or whatever the date was? The exact date that they got rid of PayPal. So there was some sort of behind the scenes, some sort of legal requirement they weren't allowed to do their own managed payment solution, and then the date that expired was the date that managed payments went live. So I think it was a bit of a rushed affair.
That would make sense, yeah, if part of the split agreement was a time scale.
Yeah.
That's a good question. Edmundo, how much can you claim for a computer if you buy it for reselling but also for normal use? How is that something you can quantify?
100% of it, because at the end of the day, this is one of those ones where you're gonna, if you need to use it for the business. So we all need a computer to be able to do the eBay reselling business. Then you're gonna have that opportunity then to put 100% of it in. And the way you kind of think about it in your mind and the way you kind of justify that is that you're selling that asset to your business. So you're gifting that asset, you're putting that business, you're almost relinquishing control of it. It's a little bit different if you're a sole trader versus limited company. A limited company, you literally are giving up ownership of it and you're giving it to a limited company. But as a sole trader, just in your mind, think about the fact that you are giving that asset to the business. So yeah, we put 100% of computer equipment in there because it's another one where HMRC find it really difficult to be able to, fight you in any other way because you need that asset to do your business. So although it's got business use on it, and that's just part and parcel of it these days.
So is there a grey area if you think, oh, that's great news, I'll buy the top of the range gaming computer? There must be a grey area at some point where you spent twice as much as you needed to, and you're actually using it more for Fortnite than eBay.
It can be frowned upon, but at the end of the day, who's to justify which is right for your business? You could say that you're doing design work or you need that high spec for the business. There's always kind of a spin on it. There's always something for it. Okay. I have known people try to put Xboxes through before. Obviously, that's a different story. That they're trying to say that it's for Skype meetings and stuff like that. Yeah, you can't go down that route. But if you are investing in a quality piece of kit and that's what your business needs, then you should get the claim for it and put it through. And computer ones are, again, the nice ones are computer and telephone. They're ones where there isn't really there's not much of a pushback, if you like, from personal use, because at the end of the day, you need the item to do the work. So, it's up to you how, and the same could be said for a mobile phone. You could buy a £10 mobile phone from Tesco, or you could buy a £1,000 from Apple. Both of them are, needed for the business, but there's no one who can really tell you what's right or wrong for your business.
Yeah. Okay. Excellent. RS Harris, as a non-driver, can you claim for weekly, monthly public transport expenses, also possibly a national rail card? Good question. I would imagine so.
Yeah, all allowable, definitely. And taxi fees, if you've had to jump in a taxi for business use and everything else. It's just, the only thing you've got to be able to do is just justify that trip you did was for business use. As long as you can do that. So if it is going to the boot sale, if it is going to the charity, if it is going to the post office, whatever it's going to be, then at that point, if you can justify it, then yeah, it's allowable. And it's exactly the same as you'd have in any other type of business. So, it just follows the same sort of rules.
Excellent. Right, let me scroll through, see what else we've got coming in. Same, we're still not signed up. We keep getting to the point, and I think, I'll message Aaron and we'll sort it out. I might have to chat with you afterwards about exactly what we need to do next. We used to use QuickBooks. I said to you, when we had the high street retail outlets, we used QuickBooks on the Mac, and it wasn't app based or anything back then with that old. And so we are in the same situation. We say in Whiteboard, can't wait to get it all up and running and start having it all in one place, neat and tidy, because at the moment you would hate my little chest of drawers I have down here with paperwork. Yeah, I'm sure you've seen them before.
Well, that was another topic I did want to bring up, was this. Have you come across making tax digital in terms of self-employed and how that's come in?
I've heard mentioned, so yes, but tell us all about what that means.
So it is, and it's kind of bearer of bad news here, because basically what's happening is HMRC started their Making Tax Digital campaign through VAT. So if you're VAT registered, you now have this requirement, not just to file a VAT return, but you have to file a VAT return via software. And the idea was so that HMRC, it's kind of one of those where although it's frustrating that you have to now use software, there's actually a benefit to it in terms that HMRC can actually now look at you, and they don't have to just, if you're VAT registered, they don't have to just give you an investigation for the sake of it. They can see the numbers behind and they can understand it. So that's always been a benefit. But basically by April 2023, let me get it right. No, I was right first time, 2022. There is a requirement then that they want to bring MTD for self-employed as well. So they haven't given us full incentive or telling us exactly what that means yet, but they have a deadline that's what they want to run to. Now, if you put your tinfoil hats on and kind of understand where they took MTD for VAT and how they want to do it for self-employed, that means that every one of us who is self-employed and running our reselling business will have a requirement to file the information not just on a tax return but via software to get that information in. And there may be, again, this is all kind of hearsay and looking through the kind of the tea leaves and everything, but there may be a requirement possibly to do it quarterly and file your self-assessment on a quarterly basis as opposed to an annual basis, again via software and putting the information in. So it's going to be a massive change if they go down that route.
I suppose, I mean, a lot of us are catching up and going digital with it anyway. So if we're on board with that, doing it quarterly is not actually going to be a lot more work if you've got all the records there already. If you're doing it old-fashioned style with drawers full of receipts, it might be more of a headache. Okay, that's interesting.
It's just one of those, I think, to keep an eye on, isn't it? And just trying as best we can to be prepared, where it could be a massive change for us. So it's just, you know, being aware.
What is this Lucas thing? Is this an Andrew Monumental thing?
Yeah, so I can't remember what he I think I put a message in, and because obviously it used to be Apple Core. He had no idea what I think he forgot at the time what my name was, and he called me Lucas, and it's just followed on since then. So yeah, now I'm affectionately named.
He was talking to me about it last night, and he said, "You've got to call him Lucas." And I said, "What's that all about?" And he vaguely explained it, and I said, "Well, in that case, I'm going to call you Jeff." So we can all call Andrew Jeff now.
That's fine by me. I think that's only fair, isn't it? Okay. And it's a cob, by the way, that goes around bacon. So don't
bring this into my channel. Okay, well, I think we've certainly covered the stuff that I had written down. I hope if anybody had questions that we've covered it, please get them in now. We're going to think about wrapping this one up soon. Please do go and check out Aaron's channel, watch the videos on there, drop questions in there. I'm sure you try and keep an eye on messages that come in. And yeah, I know we said this in the last one, but try not to worry too much about tax. It's something that scares the living daylights out of people, especially when they're new to this. And I was the same when I first started out in business in '98. It really scared me. I thought the tax man was a big scary man who was spying on me, trying to catch me out. And it's literally not the case. Generally, when I've had issues, and I have had plenty of issues, I don't really know what I'm doing, but I muddle through. I've called up HMRC, and they have been really, really helpful. They're not trying to catch you out. They're trying to help you pay them tax. So don't stress about it too much. And if you've got questions, they are on the phone or on Messenger or whatever. So talk to them. They're people at the end of a phone.
Yeah, and look at their website as well. Their website's brilliant at the moment. There's so much resources on there. You'll most of the questions that you have, you can literally find on the website themselves.
I think Andrew's put this in a couple of times. When is a good point to become a limited company? That's a whole other video, surely.
Yeah, and it is. I mean, I've done a video myself on it for people, but there is a turning point for just normal resellers, but also if you're doing it part time, I do urge you to kind of look at it sooner rather than later. So if you've got a full-time job and you're utilizing all of those allowances, then it is something you might want to look at. But yeah, we can definitely talk about that another time. And also, if you're looking into FBA, that's also a point where you might want to consider limited, just for your own protection more than anything. Yeah. So Amazon FBA is scary stuff.
People have asked us many times, why do we not? And I don't know the ins and outs of it, I'll be honest. We have been a partnership for a long time. It works. There's probably many benefits that we're missing out on, but that may be for another discussion. That might be an interesting one to do. So I don't see any questions coming in, any new ones. So hopefully we've covered some of the burning issues that come up. Thank you so much for chatting with me.
No problem at all. No problem.
And thanks for the questions. Hopefully we answered a few. So link should be below for Aaron's channel. Please check that out. And we'll do another one of these in another month or so. And we'll see you there. Thanks a lot, everyone. Thanks, Aaron, for joining me.
Thank you. Thanks all.
All right. Take care, everyone. See you soon.